Welcome back to Smart Stock Sam, the channel where we cut through the noise and find the plays that actually matter. Before we dive in, if you're new here, hit that subscribe button right now, because what you're about to hear is exactly the kind of research that separates the investors who win from the ones who watch from the sidelines. Now let me ask you something. What if I told you that back on March 17th, we called one of the most explosive moves in AI infrastructure stocks before it even happened? What if I told you that the same stock we highlighted, Nebius Group, ticker symbol NBIS, has since hit an all-time high, pulled in a revenue backlog larger than the entire GDP of some small nations, and is now sitting on a Wall Street bidding war with some of the biggest names in finance fighting over who gets to own the most shares? And here is the real question. What if the move isn't even close to being finished? Today on Smart Stock Sam, we are revisiting our Nebius thesis, validating every single call we made, walking you through the fresh data coming out of Wall Street right now, and mapping out exactly where this stock could go next. We're talking price targets, catalyst dates, options flow, short squeeze setups, the full picture. So stay locked in, because this is one you do not want to walk away from early. Let's start with the raw performance, because the numbers speak for themselves. From the date of our original deep dive on March 17th to April 13th, Nebius Group delivered a massive 36% gain, officially peaking at an all-time high of $154.56. Now let me be clear about what that kind of move represents. This is not meme stock energy or a Reddit-fueled pump. This is institutional-grade accumulation by serious money, the kind of buying that creates sustained, lasting moves rather than a spike and crash. What validates that thesis even further is the secured backlog number, $46 billion in contracted revenue stretching all the way out through 2031. When a company has that level of guaranteed cash flow already on the books, the word speculation starts to feel almost insulting. You are not guessing anymore. You are investing in a cash register that is already programmed to ring. Now here is something even more telling about the quality of this rally. It did not go up in a straight line. And the way the market handled the one dip in this move tells us absolutely everything about underlying demand. After we published our March 17th thesis with the stock sitting at $113, we saw a brief, healthy pullback down to $92 on March 30th. In the moment, you must have thought, has the thesis been blown off? And honestly, that question is completely understandable. But what happened next is what separates a true trend from a temporary bounce. From that $92 floor, the stock staged a vertical ascent straight to the $154.56 high. That pullback was not a breakdown. It was a weak hand flush, shaking out the nervous money before the real buyers stepped in, and most importantly, it was caused by broader market risk-off sentiment, not by the NBIS itself. Now, as the macro environment has improved, market has officially re-rated Nebius from a risky geopolitical spin-off into a premier AI infrastructure provider, and that re-rating is the core engine behind our $200 price target. So what actually changed the minds of the biggest bears on the street? It comes down to two names that carry enormous weight in the technology world: Meta and Nvidia. Nebius is not simply a customer of either company. They are a strategic pillar, a critical node in the AI supply chain that both of these giants needed to lock in. The Meta deal alone was worth $27 billion, and it was so seismically large that it forced Goldman Sachs to go back to their models and hike their revenue estimates for the next 4 years by an incredible 54%. Think about that for a second. One contract forced one of the most sophisticated research desks on Wall Street to revise 4 years of forward projections upward by more than half. But if the Meta deal is the anchor, the $2 billion Nvidia investment is the secret weapon. This is not simply a financial transaction, it is a statement of strategic intent. That investment buys Nebius priority silicon status, including early access to the Vera Rubin platform. While every other cloud provider is standing in the queue waiting for chips, Nebius is already at the front. That kind of access is a competitive moat that competitors simply cannot purchase, no matter how much capital they throw at the problem. And when you stack those partnerships on top of each other, the revenue math becomes almost impossible to argue against. The $46 billion total contract stack is built on two pillars. The first is that $27 billion anchor from Meta. The second is a $19.4 billion Microsoft supply agreement that does not get nearly enough credit in mainstream financial coverage. This is not projected growth or analyst estimates that might not materialize. This is secured revenue visibility stretching through the next decade. For a company with a backlog this deep, the current valuation, even at record highs, starts to look reasonable when you normalize it against the multi-year cash flows they have already locked in. Growth investors talk about visibility all the time. Nebius has visibility that most companies could only dream about. Which brings us to the institutional story. And this is where things get genuinely eye-opening. If you want to understand what real conviction looks like in the market, watch what BlackRock did. They did not simply add a few shares to a position. They increased their stake by 39,418%. That is not a rounding adjustment. That is a total conviction call from the world's largest asset manager, and they are not alone. Goldman Sachs raised their price target to $205. Bank of America lifted theirs to $175. The Wall Street consensus is now a resounding strong buy, with an average target range sitting between $163 and $165. When the largest institutions on the planet are competing this aggressively over shares, they are not playing for a quick 10% flip. They are positioning for a multi-year move. Now here is the hidden metric that most retail investors are completely overlooking, and it could be the single most important factor in protecting those $46 billion in contracts. We are talking about geopolitical hedge value. In a world where macro uncertainty is rattling markets daily, Nebius is uniquely positioned as a safe haven for massive AI infrastructure budgets. Their multi-continent data center architecture means they are not dependent on any single region, any single regulatory environment, or any single point of failure. For the Fortune 500 companies and hyperscalers allocating billions in AI compute spend, guaranteed uptime is not a nice-to-have. It is a hard requirement. Nebius checks that box in a way that far too few competitors can match. And that resilience premium is only going to become more valuable as global macro conditions remain unpredictable. And all of that fundamental strength was on full display in the price action over the last two trading sessions. On Friday, April 10th, we saw a massive breakout candle, closing up 6.3% on volume that was 68% above the daily average. Then Monday, April 13th, delivered another 6.62% jump straight to that record $154.56. This was not profit-taking. This was not a dead cat bounce. This was aggressive institutional buying fueled directly by those Goldman Sachs price target upgrades hitting desks across the street simultaneously. The tape does not lie. So what comes next? Mark April 29th on your calendar right now, because that is the Q1 earnings report, and it is the single most important near-term catalyst on the board. We are expecting to see direct confirmation of their $7 to $9 billion annual recurring revenue target. And any upside surprise, there could be the spark that ignites the next leg higher. But there is also a wild card that has the potential to completely reshape how Wall Street values this company. Nebius is in advanced talks to acquire AI 21 Labs in a deal estimated at $2 to $3 billion. If that acquisition closes, Nebius stops being just the pipes of artificial intelligence and becomes a player in high-margin application software, which opens the door to the same kinds of valuation multiples we see attached to companies like Microsoft or Palantir. Layer on top of that the ongoing progress at their Finland AI factory, and you have a near-perfect storm of positive news flow converging on a single calendar month. Speaking of the Finland facility, in the world of artificial intelligence, power is the new oil. Nebius currently has 310 megawatts under construction, but their stated target by end of 2026 is over 3 gigawatts of total capacity. Securing that multi-gigawatt power scale is the physical proof of concept that they can actually fulfill the $46 billion backlog. No power, no revenue. Simple as that. Watch their utility agreements and power contracts closely. They are the true leading indicator for where this stock is going, more than any technical chart pattern or analyst note. From a pure trading standpoint, here is your tactical plan for the week of April 13th through the 17th. We are watching for a potential dip into the $145 to $148 zone as a re-entry opportunity. That zone represents a retest of the previous breakout level and aligns with key Fibonacci support. Hard support sits at $131.72. The high-end target for this short-term window is $163 to $175, which lines up perfectly with both Wall Street's consensus and the Fibonacci extension levels. And if you want confirmation from the options market, the whale flow is screaming the same direction. Nearly 70% of all option volume is positioned on the call side. The most notable single trade, 2,808 contracts placed on the $175 call expiring this Friday. That is not a hedge. That is a high-conviction, short-duration bullish bet that directly confirms the upper end of our near-term price target zone. But perhaps the most explosive near-term setup of all is sitting in the short interest data. Over 20% of the float is currently sold short. The days to cover ratio sits at 2.33, meaning the shorts need more than 2 full days of average volume just to exit their positions. Any positive surprise, the AI-21 acquisition announcement, an earnings beat on April 29th, a new enterprise contract, anything, could be the spark that turns an already strong uptrend into a violent short squeeze. We could see shares launch toward our longer-term targets far faster than even the most optimistic scenario on Wall Street currently models. So when you put it all together, the $46 billion backlog, the Meta and Nvidia strategic moats, the unprecedented institutional accumulation led by BlackRock, the 20% short float, the upcoming earnings catalyst, and the potential AI-21 acquisition, the path to $200 and beyond has a definitive, evidence-based blueprint behind it. Our March 17th thesis has not just been vindicated, it has been supercharged. The AI revolution is here, and Nebius is building the foundation it runs on. Before we wrap up, I want to be straightforward with you, as always, on Smart Stock Sam. Nothing in this video is financial advice. I am not a licensed financial advisor, and the content here is purely for educational and informational purposes only. All investing involves risk, including the potential loss of principal. Past performance of any stock, including NBIS, does not guarantee future results. Always conduct your own due diligence and consult a qualified financial professional before making any investment decisions. The price targets and scenarios discussed in this video are based on publicly available analyst research and my own independent analysis. They are not guarantees of any future outcome. Now, here is my question for you in the comments, and I genuinely want to hear your thinking on this. Do you believe Nebius can realistically reach $200 before their Q1 earnings on April 29th? Or does the move need the AI-21 acquisition to close first before the next leg higher? Drop your answer below. I read every single comment and replied to as many as I can. If this breakdown gave you clarity or confirmed something you were already watching, do me a solid and smash that like button. It genuinely helps this channel reach more investors who are looking for exactly this kind of research. And if you are not subscribed yet, what are you waiting for? Hit subscribe and turn on notifications so you never miss a breakdown like this one. Finally, if you want to go above and beyond in supporting Smart Stock Sam, YouTube has a super thanks feature. Any support you send goes directly toward keeping this research refined, independent, and coming to you consistently. Thank you for watching, thank you for being part of this community, and I will see you in the next one.